Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, August 4th, 2022. It is 1:29 p.m. Eastern Time as I'm starting the video, and what we're going to cover in here are the mining stocks, gold miners, but in particular, I'm going to zero in on some individual silver mining stocks, and I'll cover the silver mining ETF for you. I often say this, usually if you're going to get the call right, I use this analogy in the stock market. I trade NQ, the Nasdaq 100, or the small caps, because if you're going to get the call right on the stock market, that's going to go up more. Those indexes are higher beta. They move up and down more in percentage terms than the steady Eddie S&P 500, which is full of dividend-paying stocks and utilities, defensive issues. So, you're either going to be right or wrong in your market call. Might as well get paid for it. And the same thing with the miners. You can trade the ETFs. They're safe, secure, but or you can trade the metals. I mean, first and foremost, to be bullish on GDX or the mining stocks is, of course, to be bullish on gold. They're going to follow the precious metals. And then if you dive down a little deeper, usually you'll see, especially if the charts of silver are constructive, you'll see the silver mining stocks outperform the gold miners. And you can go with the silver ETF, SIL, or you can go with individual silver mining stocks, which I'm going to cover in this video. And there's not a lot, so it won't be very long. I've got about a half dozen or so we'll cover. I'm not going to cover each and every one, but we'll cover those. Now, why am I starting out here with oil? Well, I'm going to talk on this real quick. You guys know my thoughts on oil. We've had a big, most important thing here are these yellow lines, which I'm covering in blue as I draw with the screen drawing tool. But big old divergent, bearish rising wedge with a divergent high right there. I showed you that this morning on CL, and I've showed it quite a bit lately. Crude futures, you had a minor trend line break there. That was sell signal one. Then you went on to break the wedge. You broke it, back tested, perfect back test. We've been stair stepping lower, and we're at major support now. Months ago, I laid out this swing target back here, 58.60, and this uptrend line in USO. And if that's hit, which I suspect it will be over time, we may get a bounce first. I showed the positive divergences today, but reaction or not, if we take it out and we hit it, we're at 71 right now. That's going to be another 18-ish percent, almost 20% downside in crude oil from where we're at, in addition to the 25% drop we've already had right now. So it'd be a total drop of 38%. So why am I talking about that? Some of you might remember, if you've been with the site for a while, back in 2015, I made a very bullish bottoming call on the gold and the gold mining stocks at the end of 2015, and really like GDX right there. And one of the reasons, first and foremost, got to be the charts. I've got to have a bullish setup. Technicals need to look constructive to try to call a top or a bottom. Most people think it's a fool's errand. It's just a big part of my trading. I like to catch these pivots, tops and bottoms. Don't get them all, but you take your shot and you set your stops, and you're either going to be right or wrong. But one of the fundamental cases I laid out is, see this drop, this is USO, in just a matter of about a year, I'm just measuring the percentage drop, crude prices fell 80%. And gold mining stocks were in a vicious bear market, one of the worst bear markets in years. And I said, look, not only the technicals indicating a major trend reversal, to a new bull market, but fundamentally, one of the biggest costs to pull, gold, silver out of the ground is energy costs. The diesel, fuel, gasoline, oil, electricity at the processing plants. They got to separate the, they got to go in the ground and get this. As I've said before, this isn't 1849 anymore, where gold's sitting on top of the creeks, there in California and elsewhere. We've already long since stripped the earth of all its surface gold. You got to dig deeper and deeper to get it, and so that's a big cost to the miner. So when you see an 80% drop in energy prices, with the miners still falling with it, at some point, some folks are going to realize, or the fundamentals will show that, hey, the miners' cost now to pull gold out of the ground is a lot less, and that was it. So that was a 2015 bottom. And even though oil bottomed then, again, it was already reflected in. The markets are usually lagged. You got to see this stuff in advance, get in front of it. And, of course, there was the big, giant divergences. That was the technical case made. Giant bullish falling wedge. There was our breakout candle, and just from the breakout alone, not even the very low, the miners, the initial rip was 100%, and before all said and done, until the recent highs, they were up 200%, and from that low, that was the sector was up about 270%. So, all right, where am I going there? Same thing here. So far we've seen a drop. Now, the crude recently hit multi-year highs, and that put pressure on the miners, among other things. In the dollar, we had this little bear flag. You had a trend line break here on GDX. This is a weekly chart. Move down, little bear flagging action. That bear flag, number one, has met its measured target. A measured target of a bear flag, which is a continuation pattern, is the length of the flagpole, the impulsive move down to the bottom part of the flag. You take that flagpole, you add it to the top of the flag, gives you your measured target. And that's pretty much what that was. So that's what it looks like on the daily chart. I'm sorry, the weekly, daily I've given to you, been pointing it out since back here. So we got in a little early, but we're back above, profitability from the initial entry. But I've harped on it, continued to add and make bullish case, breakout back tests. These are my targets. So no changes there. I've covered this quite a bit recently. But what I want to show you now are the silver stocks. So you have SIL is the ETF, one of them, the main one. This is the comparable to GDX. You also have, just like you have GDXJ for the junior miners, those are the smaller companies. You usually get more bang for your buck there. Depending on what's going on in the market at the time, you get your divergence, just like GDX. Remember, they're just smaller, not as well established mining companies, but they can tend to fall more when things go down. They tend to come up more when things go up. And so far, just in the last few weeks, around about 18%. I don't see it even blinking until it gets to about that 35.40 level right there, 35.50 first target there. That's just the juniors, and I was trying not to digress too much, but I can tell you can do the same thing with SILJ. Just put a J at the end of those ETFs and give you the junior miners. Or you stick with the big ones if you want a little less risk and volatility, and there's SIL. But let's go over some of my favorites here. And what I'll do, I know a lot of you prefer when I can get chart images out and a quick write-up, and I'll just make a point to include these charts since there's not too many in the post below this video, so you have these charts for reference. And again, these are some of the silver miners. A lot of the components in GDX, they mine gold and silver. They're not going to, turn away. If they, pull some silver out of the ground with gold, they're certainly going to use that. But these are more concentrated silver plays, and I've traded these stocks for years. And I can tell you when they move, they tend to move more so than the gold miners. Back in 2020, PAAS off the lows, that rally was 283%. Cuts both ways. You don't want to be in them at the wrong time, but charts are very constructive. So let me just highlight these, and we'll be done with the video. I'll get it out to you. There is positive divergence, or was at the recent lows, and just like GDX and so many of the miners, birds of a feather flock together. So all these charts are going to look very similar. You're going to see these positive divergences just like you had back here, and that was good for it was a counter trend rally, but it was 25%, in just a matter of a month or so. I'll take 25% all day long. Get in, get out, hit run. That's what swing trading is all about. This would be, well, since I started marking these up, we're already there now, so I'm just going to say we're at resistance. So probably get a reaction here, but could go right through there. Hard to say. The charts are constructive. So if you get a pullback, I don't think it's going to be very much. Maybe about right here. There's a little gap there. Let me give that level. What I like to do, I'm just tell you real quick. With these, I like to take what I call a shotgun approach. You can either, once again, take the ETF, SIL or SILJ or both of them, or GDX. You're going to have enough gold and silver. But a shotgun approach, if you want to outperform, take the charts with the most constructive, or the stocks with the most constructive charts, and sprinkle your cash. I'm just going over a half a dozen names here, so it's easy, to manage half a dozen positions, and then you can, take profits accordingly. Now, look, the sector is going to turn around the same time. They all bottomed around the same time. They're all going to top. They're all going to have reactions around the same time, give or take. But here's your targets. T1 2073. You know what? I'm not going to call the numbers out. I'll put these charts up and you can see them below the post. But from where we're looking at from the breakout, or from, you know, let's just cover right here. All right. I did cover these recently, so it's not as if I was pointing these out. I've covered the gold and silver miners quite a bit recently, so it's not, you know, you may have bought them here, here, here. But from where we're at now, my fourth and final target's about 29 and a quarter, and that'd be about a 40% run with a possible run back up, which I think is quite likely, or very much may add this as a fifth target. There are those old highs, around the old highs. There's the old highs are all the way up there. That's about 92% if hit, and there's I have a resistance line there about $37. So and the way it works is, you know, we need to power on through here, take out resistance right here. It should open the door for move up to the next target, and so forth and so on. AG, First Majestic, PAS was Pan American Silver, yep, and AG is First Majestic Silver. Just nice, you know, look at a lot of nice buying, like bullish action right off these divergent lows right here. And T1, its first resistance. Yeah, a lot of these guys are coming up to first targets now, and that's resistance. But again, I think any pullback will be bought up most likely. Let me show you if you get a pullback to here. And by the way, a shotgun approach, you can also, I like to scale in as well. In other words, if I go over 6 stocks or 7 right now, you know, you can go in today, but you're going in right at resistance, or you can average scale in if you don't have them. Again, you may have been scaling in. I've been highlighting these for the last couple months here is, you know, the mining stocks. So you may have already been scaling in, and you could just continue to do so. And I like to enter trades tactically, you know. Like that means either breakout above resistance, ideally after a pullback or consolidation, or a pullback to support. Those are your two objective levels. It's not really objective to buy something right as it rallies into resistance for the first time. Either wait for the breakout or buy it on the pullback. So there's a potential pullback, or all the way down. Yeah, you know what? You want to keep a little tighter one. Start scaling if it pulls back about 780 or so. There's a little bit of support there. MAG, I didn't even go over the potential for AG, but you have fifth target, and there's a trend line there that comes in. It'll come in around T4. That'd be about a 50% run from where we're at right now, if T4 is hit, and there'd be a total run off the lows if T4 is hit of about 100%. MAG, Mag Silver, you got resistance right here at about 1392. Again, this is a common theme. I'm doing the video just to point out that's where we're at. Where a lot of them are at resistance. A lot of reactions on that one. So pretty powerful if it can take it out. And then run up there. Next resistance 1587 right there. And then you have a downtrend line right here. So that's, and then again, of course, if that's broken, taken out, that's even more bullish. But just to get up to the downtrend line in itself, it's going to be, depending if and when we get there, it'd be about 21, 22%. FSM, Fortuna Silver Mines, 315, 375, 419, 465, and then maybe all the way up here at about 590. If we get up to 590, that'd be about a 100% rally. So, you know, you're looking at potential for a double on these guys. And again, let's loop back real quick for a second. USO. And largely but not exclusively contingent on another leg down, because if we start to see that, and by the way, that's also going to be net bullish for the stock market. It doesn't guarantee the stock market rallies, but it could, if we get down there, bring us up to those higher targets that I have for the stock market, for the NASDAQ 100, SPY, and all those other ones, because falling oil prices are also a boon. Oh gosh, not just, it's always been a boon for the consumer. It helps, obviously, when gas prices are cheaper, puts more money in the consumer's pocket. They're spending less on you know, gas, which is a big, you know, a part of most people's expenditures. But more so, much more so right now. If this happens, you're going to all of a sudden hear just a whole different narrative coming out of the Fed, because this will show that their hikes that they've already made are working, and they're going to pat themselves on the back and say, "Yep, inflationary," and it will. I mean, this is number one driver right here, one of the largest drivers of inflation. It's energy. So just keep that in mind, and as far as your, how you're trading the indexes as well. So we'll continue to watch these levels on crude oil. I'll continue to update it pretty frequently. But as of now, I think there's a chance for more downside, and so that may, keep a tailwind under the stock market for a little while. Not, of course, there'll be corrections along the way, but let me go back to where I was, and then we will wrap it up and get the video out to you. So we were on FSM, the last one. I think that was the last one I gave you. Trying to look. I'm just trying to see if I can get a nice downtrend going on this one. Yeah, I think they're right there. Hit that island cluster, island top candlestick. See right there. I pointed that out at the time. That's when you have a gap up separated by gaps on both sides. And then boom, that was marked a major top right there. And again, highlighted back at the time. And when you get those, they're not just little pullback trades. They're trend reversals. That's the end. The island, that little doji marked the high. And there's your downtrend line, may come into play. Bullish have taken out, and max target right now, if we can really get some traction going in a rally here, would be 590. That's about 102%. EXK, Endeavor Silver at resistance 384. Potential target up to about 579. And of course, all the other lines marked on here are targets along the way where reactions are likely upon the initial tag. SVM, Silver Metals Corp, or Silver Corp Metals, excuse me, 283, downtrend line plus 316. Probably get a pretty decent resistance reaction, I should say, right there. Why do I keep grabbing that loose freehand tool? I'm trying to grab the line tool here. It's a lot more even. So you've got reaction support there. We broke the support, back tested, rejected. And so if we get there again soon, it's going to be double resistance. Probably get a reaction. Then a breakout would be pretty powerful if we get this one and the others breaking out. And that should take you up to these next targets there. That one, if 670 is hit, it'd be about 150% run. So a little more juice on that one. ASM, Vino Silver and Gold, bullish falling wedge, pretty clear, straightforward, right? Confirm with positive divergences. Breakout, little pullback rally, pullback to support right now, 60 cents. These were sorted by market cap. So these, as I've gone down this list, you can see this is a penny stock, 60 cents. Pass if it's not your cup of tea. More risk, definitely more risk in a low price, especially a penny stock, even risk of bankruptcy, but also a higher profit potential if it plays out. If you take it here on this back test at 60, which is objective right now, well, it is, but the rest are at resistance. So again, maybe a starter position if you don't have any yet, or wait for the recent highs to get taken out. So one also has about 150% upside to that 147 target. And there's others out there, and in the coming days to weeks, I'll any others that I see that stand out, I'll shoot them out to you. I'll either put them in the comments section below this post, or when I do updates, I'll try to cover some other ones. And again, if you're, don't have the time or inclination to manage multiple positions, they're all in here. Most of those, at least most of the ones I just went over. This one might have a few different. These are the holdings: WPM, FR. Nope, that says a REIT, so I'm not sure what that one's doing there. I'd have to look into that, but it looks good on itself. BVN. Ooh, this one hasn't even taken off yet. That one, this is a mover too. It's a South American company. Could pop up and really run. HL, Hecla Mining, another, I believe that's also South American. These are components of SIL. They just looks good. These charts look good. CD, one of my favorites right here. Traded this one for years. When it runs, it really runs. Gato Silver sounds like another South American company is my guess, but not sure about that one. McEwen. I mean, I've traded almost every one of these stocks here on and off for years individually and covered them. So that one, breakout back test, they all look good. All right, I could sit here and I'd just go down the line. You're seeing the same things. You're seeing me draw positive divergence if I didn't have it drawn already. And you know, recent price action looks constructive. This one, I might have to move this and yeah, just leave it there. $2, 250. If it pops 250, it's going to run GORO. All right, I will get the video out to you now that I covered a lot of these components of SIL as well. I'm not going to have every single one of these charts marked up, but maybe just that first half dozen or so I covered. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.